Morning. So we will continue our discussion on gross total income and assessment of individuals. We have been discussing this for a while now. So we have completed certain sections and we have also done application based numerical questions on those sections. So sections which we have completed includes ATC, which allows certain deduction for investments, insurance and certain notified expenditure, followed by ATCCC that allows deduction for the contribution made towards retirement or pension funds. Then we have also discussed ATCCD. In ATCCD, there are two clauses. Clause 1A talks about voluntary contribution. Now it talks about contribution to pension fund out of salary income. And then section ATCCD 1B talks about voluntary contribution to national pension scheme. So the maximum deduction allowed under section ATC, ATCCC, ATCCD 1A is 1,50,000. In addition to this, ATCCD 1B qualifies for a deduction of 50,000, which is above the 1,50,000 limit, what you get in the preceding three sections. Then we also have ATD, which allows deduction for health or medical insurance premium paid for self, spouse, and children, and also dependent parents. In addition to this, it also offers deduction of 5,000 maximum for preventive health checkup. Then ATDDB, expenditure incurred on treatment of notified diseases of self, spouse, children, and dependent relatives. Then we have section ATDD, which says expenses pertaining to rehabilitation of a disabled dependent. So here, whether the SSC incurs expense or not, he can claim flat deduction of 75,000. 1,75,000 and 1,25,000 depending on the severity of disability. ATU talks about rehabilitation expenses that can be claimed as deduction in case if the SSC himself is disabled. Then we also discussed ATTTA, interest on savings bank account, which needs to be first added to the GTI under other sources and then later claimed as a deduction under section ATTTA. Maximum deduction under section ATTA is restricted to 10,000 rupees. So these are some of the deductions what we have discussed. In fact, we also discussed section ATGG, which talks about deduction pertaining to payment of rent of an SSC who is not in the receipt of HRA, which has a procedure to calculate the rent, what he can claim as deduction. So there are 3 steps that needs to be followed. So we will continue with our discussion today and we will discuss one of the most comprehensive section. And this section is slightly challenging because you have to remember the categorization and you have to remember some lengthy lists. So it's not that easy. So it requires your attention. So section 80G is what we are about to discuss in today's class. So section 80G says an SSC can claim deduction under section 80G if he contributes or if he donates to specified funds or organizations. And the donation has to be in cash. It can't be in kind. So you have to, this is the section that promotes social welfare by allowing people to take part in some of the welfare activities. So this section primarily says that if you give donation or if you contribute some money to certain notified funds and also certain organization, you can claim deduction. Now, for the purpose of claiming deduction, the entire section 80G is split into 2 broader categories. Category number 1 is called deduction without any maximum limit, which can be claimed at fixed rate. And the fixed rate can be 100% of the deduction, 100% of the amount donated, or 50% deduction of the amount being donated. So in this, you have 2 categories. So what this means is that this part of the section allows deduction to the SSC without fixing any kind of limits. That means if I give 1 crore donation, entire 1 crore can be claimed as deduction under this section. But there are 2 subdivisions. In first category, deduction is 100% of whatever you're contributing. In second category, deduction is only to an extent of 50% to what you have contributed. For example, if I contribute 10 crore rupees to Prime Minister's Earthquake Relief Fund, so I get 100% deduction of whatever amount I have contributed. But if this donation belongs to the category B, then I get to claim only 50% of what I have donated. So that's the difference between 100% of the amount donated and 50% deduction of the amount donated. Then you have the next broader category, which has a limit, because in first category there is no limit as such in terms of what you can donate. Only there is a fixed rate, which is 100% and 50%. But here there is a limit, and the limit is subject to 10% of adjusted GDI. So what it means is, let's say there is a particular donation for which I have given, there is a particular fund for which I have donated 1 crore rupees. Now this fund falls under this category, subject to GTI category. I have donated 1 crore. So what happens is, first we have to calculate what is 10% of GTI. Then 100% of the amount what you have donated, category C. Compare both, and the deduction will be whichever is higher will be considered as the amount which is being donated for deduction. So in this C and D category, which you can see, the amount donated will be compared with 10% of GTI. That's the difference. Here you have to do a comparison. The amount so donated will be compared with 10% of adjusted GTI, and then the final amount will be taken. So whichever is less will be considered. I think I mentioned whichever is higher. No, whichever is less will be considered. So in category C and D, we do a comparison. So in case if the fund falls under category C, so what happens? We do a comparison. 100% of the amount being donated or 10% of adjusted GTI, whichever is less will be considered as the amount that can be claimed as deduction. If the fund falls under category D, then what happens? Again, I take 10% of the adjusted GTI and 50% of the amount what I have donated. I'll compare both and take whichever is less. So in category A and B, we are not going to do any kind of comparison. Whatever amount you have given, that can be claimed as deduction. If it belongs to A, 100%. If it belongs to B, 50%. Whereas in category C and D, whatever amount you have given as donation will be compared with 10% of adjusted GTI. And after comparing the amount of C and amount of 10% of adjusted GTI, whichever is less will be considered. So same thing with category D also. We compare this with adjusted GTI and take whichever is less. So these are the 4 categories of ATG deductions: A, B, C, and D. Now, what are the categories of funds that falls under category A? So it's a big list. So these are the funds that falls under category A. Flat deduction at 100%. So this includes your National Defense Fund, Prime Minister's National Relief Fund, National Foundation for Communal Harmony, approved university educational institution of national eminence, Zilla Saksharta Samiti, constituted in any district under the chairmanship of the collector of that district, fund set up by a state government for medical relief to the poor, National Illness Assistance Fund, National Blood Transfusion Council, or to any state blood transfusion council, National Trust for Welfare of Persons with Autism, Cerebral Palsy, Mental Retardation and Multiple Disabilities, National Sports Fund, National Culture Fund, Fund for Technological Development and Application, National Children Fund, Chief Minister's Relief Fund, Army Central Fund or the Indian Naval Benevolent Fund or the Air Force Central Welfare Fund, Andhra Pradesh Chief Minister's Cyclone Relief Fund, Maharashtra's Chief Minister's Relief Fund, any fund set up by state government of Gujarat exclusively for providing relief to the victims of earthquake in Gujarat, Prime Minister's Armenia Earthquake Relief Fund, Africa Fund, Swachh Bharat Kosh, Clean Ganga Fund, National Fund for Control of Drug Abuse. So these are the 23 funds that falls under category A. So that means you're giving donation to any of these 323 funds. Whatever amount you donate, you'll be able to claim that as a full deduction. Then comes your category B, which has only 3 funds in this. So this is relatively very simpler and easy to remember. So in category B, what happens? Whatever amount you give, only 50% of that can be allowed as deduction. So this includes Jawaharlal Nehru Memorial Fund, Rajiv Gandhi Foundation, Prime Minister's Drought Relief Fund. Now, funds that belong to category C. Category C and category D has a additional step in which we compare the amount of donation with 10% of adjusted GTI and take whichever is less. So in case of category C, 100% of the amount donated will be compared with 10% of adjusted GTI, and whichever is less will be considered. So this includes government or any approved local authority, institution or association to be utilized for the purpose of promoting family planning, the Indian Olympic Association, or to any notified institute for development of infrastructure for sports and games or sponsorship of sports and games in India only. So only donation by a company. So individuals cannot give donation to these organizations. Next, you have donation which qualifies for 50% deduction after comparing it with 10% adjusted GTI. So this includes donation given to local authority, institutions or association for charitable purposes, but it has to be approved by the Income Tax Commissioner. Second, donation given for promoting planning, development and improvement of cities, towns and villages, or both. Donation given to any corporation established by central or any state government for promoting the development and welfare of the and interest of the member of minority community. And the last one, donation given to any notified temple, mosque, gurudwara, church or any other place notified by the central government to be of historic, archaeological or artistic importance for renovation and or repair of such place. So the tip here is to remember category B, C and D, because category A, the list is quite lengthy. So remember category B, C and D and apply your mind, and anything that does not falls under B and C and D would obviously come under A. That's the best way to remember the list of donations and organizations under section 80G. Otherwise, alternatively, you have to remember all list A, list B, list C and list D. So list C and list D, the deduction is determined after comparing the contribution, which can be 100% in category C or 50% in category C or category D, with 10% of adjusted GTI. So how do we calculate this adjusted GTI? In fact, we did discuss section 80GG, in which the assessee who is not in receipt of house rent allowance can claim deduction. In fact, there in section 80GG also we require adjusted GTI. In section 80GG also we require adjusted GTI. In section 80G also we require adjusted GTI. So how do we calculate this adjusted GTI? Let's look into the steps for computing adjusted GTI. So this is how we compute adjusted GTI. So first we take gross total income. From this we minus long-term capital gains, short-term capital gains on sale of shares or mutual funds. Then also deduct any deductions claimed under section 80C2, 80U, obviously except 80G because we are doing 80G now. So this end result is called adjusted GTI. So we need adjusted GTI for the purpose of computing deductions under section 80G and also for computing deductions under section 80GG. So for these two deductions, we use adjusted GTI. So let's do some numerical calculations now. So you can just go through the list here. So the entire list and details are given in your study material for you to go through and remember the concepts. And anyways, I'll be sharing this PPT also with you now. So first of all, you should know what is the purpose of 80G and what are the categories of funds and organizations that are listed and notified under section 80G. So those four categories A, B, C, D is something which you people have to remember. Okay, so let's go to the question here and prepare the solution. So our first task is to identify gross total income. As usual, we would do that. So computation of not gross total income, you have been asked to calculate total income. Total income of Mr. Iqbal is the name of the assessee for the assessment year 2020-21. So let's follow the usual steps. Let's do a table. Our first job is to list out various incomes. So first is salary income 5,50,000. So income from salary 5,50,000. Next you have taxable income from house property. Taxable income from house property 2,20,000. Next you have long-term capital gains 2 lakhs. So taxable long-term capital gains 2 lakhs. Next we have income from other sources. Oh no, we have one more capital gain, short-term capital gain 25,000. So taxable short-term capital gain from shares, that's the last point, which is 25,000. Followed by this, we also have income from other sources, which is cash gifts from relatives and also interest on deposits. Income from other sources. So this we have interest on bank fixed deposit and also gift from non-relatives. The amounts are 60,000 and 75,000. So that concludes our entire list of incomes. So let's cross check once if we have included all. Yeah. So we have incorporated all the incomes. So the outcome of this step is called gross total income. So 11,30,000. Next, apply deductions. Deductions under Chapter 6A of Income Tax Act. One by one, let's apply. So first deduction here is donation to Prime Minister's National Relief Fund. So we should know which category does this falls, whether this falls under category A, B, C or D. So this is the main task which you have to do it. So this is Prime Minister's National Relief Fund. So Prime Minister's National Relief Fund doesn't comes here. So obviously it will be category A. Here you have Prime Minister's National Relief Fund. So it belongs to category A, which is qualifying for 100% deduction. So let's write here. We have deductions here in this question, which are all from ATG only. We don't have any other deductions. So section ATG, under this category A, fixed category A is fixed rate deduction. So let's write fixed rate of deduction, which is 100%. So under this we have Prime Minister's National Relief Fund, and the amount contributed here is 1 lakh. So let's write that. 1 lakh is the amount of donation given. Next, do we have any other donation that comes under this category is what we are looking for. So let's look at the question again. Second category. So let's, for our understanding, let's put a mark here. This belongs to category A. Next is Rajiv Gandhi Foundation. So Rajiv Gandhi Foundation belongs to category B. So if you put a mark here, it becomes easy for us to do the calculation. So as you can see, Rajiv Gandhi Foundation belongs to category B. Then you have donation to PBMP, which belongs to category C. As you can see here, donation to local authority for promoting family planning. So this is category C. Then you have donation to a notified temple, mosque or any other religious institution, which comes under category D. Then you have National Defense Fund. So National Defense Fund is not coming anywhere here, which means it will come under category A. So National Defense Fund. So should be somewhere here in the list, National Defense Fund. So let's check. National Defense Fund. Okay, so it must be somewhere here in this list. Here it is, the first one, National Defense Fund. So qualifies and comes under list A. So let's put list A here. And Swachh Bharat Kosh will also come under list A. So whenever you see section ATG, important task and priority here is to classify these donations under various lists. That's important. So as you can see, Swachh Bharat Kosh will also come under category A. So we are doing first category A donations. So let's list all of them here. So category A, what else? So the last two, National Defense Fund 50,000 and Swachh Bharat Kosh also is 50,000. So these two will come here. So Swachh Bharat Kosh. The amounts are each 50,000. So let's record the amounts. 50,000. This is also 50,000. Next, we go to category B. Fixed deduction, but only 50%. So under category B, what do we have? We have only one, Rajiv Gandhi Foundation, which is 50,000. So let's write down Rajiv Gandhi Foundation. Only one is there in this question. 50,000. Next, category C will come. So what is category C? Category C is subject to qualifying amount. And how do we calculate qualifying amount? By comparing 100% of donation or 10% of adjusted GTI, whichever is less. This is how we compute the qualifying amount. So under this category, what are the donations? So category C, we have only one, BBMP. So donation to local authority, BBMP, for family planning. The one is coming in this category. So we have to compute the amount manually. So we have to do a note. So C note 1. So because the idea here is to calculate adjusted GTI, for which we have to do this note. So note 1, note 2.